Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today I'd like to go over current market conditions, what to expect short-term, what to expect long-term, how to hedge your portfolio, and how to take advantage of the current market volatility. All right. If you have any questions, my goal for today is to make sure we answer any questions that you might have. Number one goal is to build a community of like-minded individuals that we're here to support each other. We're not here to judge. We're here to learn and make money. And I want to make sure that any questions you might have, you feel free to ask them. And it makes me very happy when everybody participates. So if you do have questions, please ask them. For those of you who are new, welcome. Type in first, say hello inside of the questions box. Always want to say hello to the new subscribers. This is my brief bio. Was Executive Vice President, Head of Technology at Options Express from its inception through 2007. So started at the end of 1999. Started Tradespoon in 2012. I built several technology platforms for broker dealers. So my background is technology, building software, working as a CTO, and then after couple companies went actually public, I've been managing my own money and made a few mistakes, learned on my mistakes, and that's the main reason why I'm here, to kind of share my experience, to help you not make the same mistakes I did, provide, I think, one of the best technologies out there for financial markets, and share my trading experience. So that's my passion. If this is your first event, type in first. Disclosures are very important. I am going to go through a few trading examples, some of them live positions. So it's very important to understand risk and characteristics of standardized options. I encourage you to find that on the slide here, optionsclearing.com. Also, I'm not a financial advisor. I'm not here to make any recommendations. I'm here to share my experience, right? To show you what I do in my own account, on my own portfolio, for educational purposes only. Please consult your financial advisor prior to making any trading decisions, because ultimately we all have a different background and managing different amount of money and have different risk tolerance levels. All right. Also, it should not be assumed that the future trade picks will be profitable. All right. Before we jump into trading plan, let's go over current market conditions. Let's look at, so we did have June unemployment numbers, right? So the main events right now are, today were non-farm payroll, better than expected, right? So still strong economy, still more job openings than the candidates. Unemployment rate stays at historically low. Average hourly earnings are in line with the expectations. Labor force participation in line with the previous. So the initial reaction, interest rates are up, right? The inflationary pressures in terms of hourly wages and the fact that there are too many job openings and the wages are continuing to rise, that inflation will persist here and stay longer. So 10-year yield, 5-year yield, 2-year yields are all going higher because of the inflation expectation. But you still see this, my opinion is probably very contrary to majority of the people opinion. If you look at CNBC and Bloomberg, a lot of people say we're going, to 4%. That's not my opinion. I don't think we're going to 4%. I think actually the narrative is changing, right? The narrative is changing is that the inflation is not going to continue higher, that this is probably the top or very close to the top. The more likely scenario, we're going to have this kind of a head and shoulders, right? And eventually break through this level, right? Sometime, I don't know, sometime between September and October, right? The narrative is changing. Instead of this hyperinflation, Fed will raise interest rates end of July by 75 basis points, maybe 50, 75 basis in September. But once it gets close to this 3.2 or 3, then they will probably pause, because again, the new narrative is stagflation, right? The only way to deal with high wages is you have to basically be able to let go people, have less job openings, and supply and demand, right? Otherwise, how else can you fight wage inflation? Commodity inflation is getting better, right? The oil prices, the lumber prices, the copper prices significantly pull back. But again, one thing, it could be ease of inflation, or the future, the economy will slow down. So my take is that the economy will slow down significantly, where interest rates will continue going lower and eventually break through this 2.7% and head lower. So I would pay attention to interest rates. Meanwhile, they're stable, right? They've been trading between 2.7 and 3.5, since April. So, and that's what everybody wants. Nobody wants the yield to continue going, to 5%. Nobody wants yield to go back to 1%. Both extremes shows this is, recession, right? Stagflation, right? And this is hyperinflation. Both scenarios are not good words to use in a sentence. So you want to avoid recession, stagflation for the market. So as long as you have these head and shoulders or some kind of a box where interest rates are trading, then that's positive for the economy, for the market. Positive for the stock market. You do have yield inversion, which usually indicates recession, right? 2-year yield and 5-year yield yields more than the 10-year yield for now several times this year. This has been actually for the past few days stubbornly. Usually it does indicate that the probability of recession is gradually increasing. The other headwind is a dollar, right? Continue to trade high. We did break through 105, which was a negative surprise, and got as high as almost 108. We're going back to 2002, right? So 20-year high dollar. We haven't even had it in 2008, nor in 2020, that level of stronger dollar, which is also bearish for the market. So the market internals basically showing that, that the market, there's still more room to the downside than to the upside. Meanwhile, short-term market is oversold. You did see, even though of the hyperinflation and better than expected unemployment numbers, right? More job creation. Initial reaction, spiders dropped the first, an hour, first 45 minutes, significant drop, 1% on QQQ, and then revert. By now it's actually turning slightly positive, right? The QQQ is flat, spiders up, ARC also up 2%, right? Significant down, up. So there is a lot of appetite for risk taking, right? And ARC innovation is actually breaking through this level and continues to go higher. So what does that mean? What's the interpretation? A lot of people ask why these reversals occur. The best explanation I can tell, we are extremely, doesn't matter what indicators you use. You can use RSI, MACD, you can use artificial intelligence. The idea is that if you look at the 6 months predictions for spiders, right? Support is at 10 day, let's see, 6 months. Right, we reached 360 level. Model basically saying at 360, the stock market is extremely oversold. 413, it's possible that we can reach 413. We're at 390, so we're 30 points higher, 23 points lower, probably sitting somewhere in the middle of the range, right? So short-term market is oversold, and I think it will continue going higher. I agree with the model. I think core scenario it's 413, right? That we get to 413 level. Obviously, market can overshoot on the upside, just like it overshot on the downside. On the downside, it overshot last 2 months by 5%. Model says 410, 5% would be 430. fine. I would not, we always argue with John, who's going to eat their keyboard. I would probably not eat my keyboard if we reach 430. Unlikely scenario, maybe 20% chance, right? That the pendulum will overshoot to 430. I would say maybe 20% it gets here, right? 420, maybe 50% chance it gets here. And more likely, July low. February low, right? 409, 70% chance, right? Not chance, my confidence level based on the market internals. Because we did have negative news, unemployment numbers, manufacturing index. It seems like no matter what the news are, and the trend has changed, right? We're posting higher lows, right? So these double bottoms are usually a good indication that that the next leg is up, right? Sometimes it doesn't hold, right? But in both cases, when you do have double bottom, especially if the second leg is higher, then you do have a neckline. You do want to break through this 393. That's the level of overhead resistance right now. But high, 70% probability it goes higher. 30% probability we retest the lows, right? And the main unknown right now, we're past the unemployment rate. The next level of data is the CPI data, right? Core CPI data. Wednesday and Thursday, that will spark the volatility, right? Two scenarios, right? There's only two scenarios possible, right? One scenario is this, right? The other scenario next week is this. Basically, repeat of the similar setup we had in June, right? In June was a similar setup. I said 380 is the bottom. The conversation almost was identical. 380, it was extremely oversold. We did bounce all the way to 410. I said as long as CPI is the same or better, market continues to go higher, probably gets to 430, 440 level, right? That was the conversation in June. It's the same conversation right now. If CPI data, right, we kind of learned on the past two CPI data. If CPI data is worse than expected, right? It was, I think, expected 8.3 last month. It was 8.6. Now, I don't know what the expectation is. It doesn't say, but I think it's around 8.3. If again, it's going to be, I don't know, 9% year over year, right? And months over months, it's going to be, 0.6 or 0.9. Then most likely, then you have scenario 2. Right? If inflation is within the expectation or slightly better, then you have, scenario number 1, right? So both scenarios possible. I'm an internal optimist. I don't really know will CPI going to be better or not, but I always think status quo at least or better. Status quo or better, we're going higher. Obviously, if it's worse than expected, then we're going lower. No model can predict the outcome. The model actually right now does show that bulls are in control, right? The bulls are in control. If we do 10-day prediction on spiders, model actually neutral on spiders. QQQ, let's see, is it still positive? QQQ is much stronger, right? So technology has been outperformed on lower interest rate. Technology has been outperforming spiders. So the model basically saying going into today's unemployment number, going into the CPI and PPI print next week, the path of least resistance is to continue going higher, right? Bulls are in control short term. Bulls are in control short term, and potentially can reach one of these levels. So for traders, it's important to also have an opinion, right? So you have different scenarios, right? The first question, everybody, you turn on CNBC and Bloomberg, there's only one conversation: is this the bottom, right? We did this on Yellow Tunnel platform yesterday. That's the question number 1, right? That you need to answer, right? If you're a short-term trader, or if you are long-term investor, right? It doesn't really matter, because my friends are, say, well, I don't really, I have full-time job. I don't really follow the market. I have money in 401k, what should I do? You know, and then the answer is, do you think this is the bottom, right? Because if you think this is the bottom, you probably want to start, or close. It doesn't have to be the bottom, right? It could be close to the bottom, even if it's within 10%. If this is within 10% of the bottom, and you're a long-term investor, then you should probably start buying, maybe aggressively, right? If you don't think this is the bottom or even close to the bottom, then you probably want to hold off, you know, pushing your 401k into, you know, into the equity market. So that's the question number one: is this the bottom? And you know, if the bottom is at 350, if you think that the bottom is at 350, which a lot of professional money managers actually believe, to me 360 and 350 is the same thing, right? I mean, it's 3%. Nobody can, that's the bottom, right? If 350 is the bottom or 360, and you said 360 is the bottom, but it turns out that 350 was the bottom, to me, then the answer, you answered it correctly. You know, if you think 350 is the bottom, but you know we end up 300 is the bottom, then you know, then probably you know, your opinion was incorrect. So their first question is this the bottom? William, there's so many decisions to make when investing. How one determine which strategy is the best for them? Well, first of all, are we doing trading or are we doing investment, right? Trading is a short-term trading, and you do certain strategy. This is more of a long-term, either long-term positioning or investing, right? How do you know which strategy is the best? Well, you need to have an opinion on this question, right? Because the strategies will change dramatically if you think this is the bottom or you think this is not the bottom or not close to the bottom, right? So let's go through that exercise first. Trading, okay. We'll go with trading. So is this the bottom? Just type in yes if you think we're close to the bottom, or type in no if you don't think we're close to the bottom. You know, 3-5% to me, it's close enough. No. All right, so most people said no. Okay, anybody says yes? Or I have no idea. No. Okay, so most people said no. So if the answer is you don't think this is the bottom, right? Then how do you trade? Well, longer term, you probably don't want to. You want to have cash, right? So you do have this bucket of cash. And you know, it's not unlimited, right? It's everybody have their own buckets, but there's a limit of, you know, on average it's $10,000, right? Of, you know, account value. So you have to, you know, if this is not the bottom, you want to preserve the cash, right? You want to at least have 50% of your cash sitting in the bucket and not use it, right? Because if this is not the bottom, you want to start deploying your cash into long-term positions once we're close to the bottom, right? And whatever that bottom is, 300, 250, we'll have to wait and see. But you know, if it's not 360 or 350, then you wait. You have to wait and preserve the cash, right? So I propose, you know, rule number one, the number one strategy: 50% of your portfolio in cash. It's a strategy, right? It's a trading strategy. So that's rule number one. Rule number two: if you don't think we're in cash, then some of the decisions, you know, William kind of question, you know, there are so many decisions to make. How do you want to determine which strategy is the best for them? For me, the strategy that is the best for me, that works well for me, well-defined risk, right? Where I know what my risk and reward is, right? And I don't have to guess, right? So the strategy that give me a well-defined risk versus reward is something that I prefer to do. In the current environment, these are some kind of derivative of a spread, right? Option spread. Why option spreads are preferred method? Because it's a well-defined risk, right? You have your long leg, you have your short leg, you can have a multi-leg, you know, iron condor, butterfly, but you know whether the market is going back to 460 or whether the market is going to 300, right? It doesn't matter. There's only so much money you can lose in a spread. right? And I propose to have 4 positions, right? I propose to have only 4 positions. That's the second strategy, right? And no more than 2.5% of account value is at risk. With spreads, it's very easy to do, right? $10,000, 2.5%, it's $250. I do a spread, it's probably just 1 contract for most of the positions. Maybe a couple, depends on the strike price, maybe 2 contracts, but I'm risking no more than $250, right? If it's a $2.5 spread, 1 contract, if it's a $5 spread, then you have to exit out, not when it goes to 0, but when it loses 0.5%. So it's very simple. You basically trade usually 1 contract, $2.5 spread, $5 spread. If you do $10 spread on larger strike prices like QQQ, then you only can risk $2.5. So what do? The support is at around 360 short term, overhead resistance around 409, 420. Right now we're in the middle, right? You have maybe 22 points to the upside, right? You have 22 points to the upside, and you have roughly 28 points to the downside. So 50-50 chance, right? So you're in the middle, right? On Wednesday, if CPI is worse than expected, we'll drop to 360 or at least 370 very quickly. And if it's better than expected, we will jump to 410. Right now, it's a 50-50 chance. So maybe you don't do anything and you wait, right? If you start building position at 370, 380, 360, maybe you raise money, right? You raise cash in case we do drop. And, we already had about what we measured, 8% rally. Significant enough rally where it makes sense to start taking some profits. But once you start reaching resistance 1, right, resistance 2, right, even resistance 3, in my journal, I have a journal, I'm writing down that I'm going to start sell at resistance levels, well-defined resistance levels, such as 409, maybe 416, maybe 413. This is where I'm going to start selling, right? And it depends on your personality. Depends how much risk you want to take. Maybe you sell, I don't know, 60% of your longs at 409, and maybe you sell 20% of your longs at 420, and then, 430. Only if you think we are in the bear market, right? The definition of the bear market is lower highs. Obviously, if you think we're going to make new all-time highs, then you probably still want to sell, but maybe not as aggressively. And maybe you want to wait till, at least we break through the 416 level, because the conversation will change. The dialogue will change. Let's say, by end of July, we are trading at 435. We have to go back to the whiteboard and basically decide, if market is trading here, well, maybe the bear market is over, right? Maybe, right? But until then, you probably want to start trimming your position at these resistance levels. If we have a CPI print, and let's say it does drop to 360, right? These are your support level, right? You have your support 1, your support 2. This is where you can be buying, right? Maybe you buy 30% of your free cash. And when I say free cash, it's this bucket, right? This one you don't touch, but this bucket, you can start deploying some of your cash at S1 and some of your cash at S2, because if your opinion that we're not close to the bottom, and if we're trading below 360 for a couple of days, most likely, we're heading lower. We're heading lower. I think July and some of the August, the market is bullish. This is probably still going to be bullish or market neutral, right? Bullish to neutral. And, end of August, September, October, November is probably bearish, right? Bearish to market neutral, right? So in terms of timing, maybe it makes sense to buy at S1 and S2, right? I personally will probably, we'll see what the CPI print is. If it looks like, if the action looks like this, I'm probably gonna step out and start closing more aggressively. But if it's, kind of a gradual, then maybe it makes sense to buy at S1 and S2. So that's my view on the market. And, William, hopefully I answered your question. Down the, I think the bottom is in, but I think there will be a test, maybe 50% of this move. Okay. Advanced and decline indicator, Carmen. I use some technical indicators. Mostly I use stock forecast toolbox to determine support and resistance and trends. You can see I use Bollinger Bands. I do use MACDs, mostly on indexes when I do my analysis. Advanced decline indicators, not as much. William, thank you for your kind feedback. All right. Any other questions? So meanwhile, spiders are getting slightly higher. ARC Innovation up 2%, Russell 2000 up 0.5%. QQQ is turning positive, so value is positive. So it looks like we have a reversal. So we'll see if that holds into the closing. And looks like dollar is also pulling back, which is probably a good thing. All right. So what are most favorite strategy, right? William asked, like, which strategies work, which do not. The most common strategy when VIX is elevated, right? We have VIX that's above 25 for the past 6 months, right? Right now it's actually at 25, right? A little bit overdone, right? But or at least above 20. I mean, it's been above 20 for the past 6 months and above 25 since April. So VIX is elevated. What strategies works the best are selling premium, right? So one of the position is QQQ, right? So selling to 80 put, right? I'm bullish into end of August, right? Into end of August, I'm still bullish, but in December, I'm bearish. So if this is right, and that's a lot of people ask question, how can you be bullish for the next 10 days, but bearish for the next 6 months, right? Most people don't understand, new traders, that market moves as a wave, right? Sine, cosine. So 10-day forecast, you can be bullish. 6 months forecast, it could be bearish, right? Because you're analyzing different amount of data, you're making predictions for different sets of data, right? Same thing with seasonal chart. One of the most common questions we get asked, mostly from new subscribers or new traders. So, you do have to, in trading, you do have to trade in a bear market, right? You have to think in 3-dimensional, right? Which is difficult, right? Most of us did not take, calculus 3, right? But you have to think about time, you have to think about direction, and you have to think about magnitude, right? It's the vector that gives a point in 3 dimensions, right? A lot of people just cannot, only 2 dimensions or 1 dimension. But to be a trader, as an investor, you don't really care about time, right? You buy Tesla and you have long-term vision. You basically saying, I don't care short-term Tesla going higher, long-term Tesla going higher, and because I only think in 2 dimensions, right? But to be an active trader, you have to develop this 3-dimensional view, because each data point is defined by direction, the magnitude of the move, and the timing, right? So the model, which is very, very difficult concept for a lot of new traders, and I appreciate that. But 6 months forecast can be negative, and 10-day forecast could be positive, right? And a lot of, this is probably the most common questions everybody asks. Vlad, something wrong with the model. What do you mean? QQQ is, who's right? Is this the, is the 10-day forecast right, that it's positive, or is it 6 months forecast, right? Or, sometimes with seasonal chart, it will say one or the other because different time frames. So that's the answer. The answer is that, you have to zoom out. If I look for the past 6 months, you don't have to be an experienced trader to see that spiders is in downtrend, right? No matter how you slice it, no matter how you dice it, the trend is down, right? And it's not changing, there's no evidence that it's changing, right? But if you look short term, if you just concentrate on, since middle of June, well, it's obviously positive, right? So visually or through the models, that is a very important concept that you have to think about, how much more can the stock market move, right? In what direction the stocks move, and how much more time will the stock move higher, right? So this is extremely complicated concept, but certain things come to you naturally, certain things you have to work on, and it comes with time, it comes with practice. But you always have to ask yourself, how much more time, how much longer can this rally last? What is the maximum measured move? Is it 10%, 15%, this bear rally, 20%? And, what direction is the next move? Are we heading higher next move, or are we heading lower? The good news is that we do have models to help you make that decision without, having too much experience. 10-day, clearly QQQ is an uptrend. 6 months, clearly QQQ is in downtrend. It takes 2 to 3 candlesticks to change the direction of the market. Right? If you want to, on the long term, if you're looking at the monthly chart and market is in downtrend, you need at least 2-3 months of posting higher highs and higher lows for the trend to reverse. If you're looking at the 10 days, you need at least 2 to 3 days for the trend to change, right? If you look at the 1 hour chart, it'll take 2 to 3 hours for the trend to reverse, right? So something to keep in mind when you look at the candlesticks, again, time, you have to figure out how long is the candlestick, what's the concept of time, not an innate thought process, something you need to learn. And it'll take 2 to 3 candlesticks to reverse the trend. Again, 2.5% of account value, no more than 4 positions. Right now, unless you're an aggressive day trader, I propose your stop loss so you don't take too much risk. This is your stop loss. It's the recent low, 362. We're probably not going to reach it, Monday, but by next Friday, it is conceivable that if CPI and PPI is worse than expected, we are back to 360 or below. So I would propose to use your stop loss as 360. So let's say you have a reversal, you think this rally is going to continue. Okay, you buy at 390, right? Because you think we're going to get to 420, right? If we break this level, then the next overhead resistance is this, right? This is R2, R1. Let's say by the end of the day, all of a sudden this rally continues. Like yesterday, we're up 1%. Okay, you're saying, okay, I believe that we can reach 420 level. It is possible. Okay, you buy, but then how many shares can you buy? This is where the calculation come in. You buy at 390, you exit at 360, that's 30 points to the downside. Maybe you want to wait till it reach 420 plus 30 points to the upside. You're risking 30 points, right? 30 points on a $250 risk, right? For 2.5% of $10,000 is $250. I propose if you have $10,000, do not risk more than $250 per trade. Okay, so 30 points, if you buy it at 390, it's eight shares. So you can invest 8 shares. Based on your personality, you can either, if you're very aggressive, you just buy all 8 shares here. If you're more conservative like I am, you would buy 4 shares here. And if CPI, as a result of CPI, we drop to 370, and you think this level will hold, you buy 4 more shares. Because then at 360, you're not going to be down more than 2.5%. And that's the thought process. Whether you're buying options or stock, these are your exit levels. If you buy Rivian, if you're buying oil, if you're buying whatever you want to buy short term, these are your exit points. I would encourage you to look at QQQ and spiders to decide, because I don't think if spider is going to drop to 360, oil is going to retest new highs, right? That correlation is broken. So, whether you buy technology, banks, or consumer staples, look at the spiders, look at QQQ. If this level is broken or this level is broken, then everything follows. But this calculation is the most important. If you can get down in the simple rule of 4 positions, 2.5% of account value, then everything else will follow. Any questions so far? and then drop to 350. I actually did, Kevin, thank you. It's possible, right? He said 95 today, right? So he was actually wrong. I mean, and this is the perfect point. This is extremely actually, I'm glad Kevin brought that up, right? He basically said as soon as Friday, it will drop, right? What did he say? Top at 394, possibly stale as soon as Friday and then drop. So he basically said, well, the market is, I think he said today it's going to drop, and the market did drop, but well, we'll see where we're going to close, but most likely, at least as of right now, he's probably going to be wrong, right? Or he could be right. But the point is, this is a perfect example. First of all, on national TV, you do not want to say market will top out at 394 and then drop, right? You can say, there's a high probability because of the resistance level, market will reach 390, and then as a result of CPI number, it will drop, right? But to say on national TV, it will top out at 394 and drop, it's a problem. Especially, I mean, he's a technical analyst, he's not a trader, but for a trader, that thought process is extremely dangerous, right? You cannot just assume market will reach this level and drop. You can say, I think 70% of the time it will do this, but 30% of the time it will, it will do this, right? It will go higher. But you cannot say, well, by Friday, because nobody knows, right? He has no idea. He can look at the chart very long time and he can be the best technical analyst in the world, but he does not know whether the market is going to top out at 394 and then drop today. Like, he has no idea, right? And actually, perfect example where inflation is worse than expected and spiders is actually positive, right? So I encourage you not to think in terms of absolute levels. You can have an opinion that we have this resistance, clearly defined resistance, and more likely than not, we need at least pull back, right? So it is considered pullback, but at least he made an impression that we're gonna retest the lows, like next week. At least that's what I got out of his interpretation. But he has no idea, right? It's a 50-50 chance. He said it as if this was certainty, but I encourage you not to think about anything that's 100% certain, right? It all depends on CPI data. It's bulls are in control, and if CPI data is either as expected or better, then the rally will continue. But if CPI is worse than expected, yes, then he's right, it will drop. But you cannot say that was 100% certainty, right? You can schedule your trades and your hedges based on one opinion or the other. I have the opposite opinion. I think next week we're actually going to continue going higher. But I do realize there is a chance that we're going to drop to 360. So I have to control my position size in the trade. So very important concept. This is how you can actually get in trouble, or how I used to get in trouble. Right, here on CBC, you have this, CIO of UBS comes out and say market will top out at 390, and it will drop next week and retest 360. I'm like, oh my God, I better close all my long position. No, that's wrong, right? That's the problem with listening on national TV, right? He could be right or he could be wrong, but don't think about that this is 100% certainty. Right? There's no such thing as 100% certainty. I would encourage you to still maybe think about longs, wait for CPI data, and if you do see, this reaction to CPI data, then you can start closing your long positions. But right now, start closing your long position because Fundstrat contributors said it's gonna top out at 394 and close. I think that would not be the right decision. All right, but Kevin, good discussion. Thank you for bringing this up. Bill, thoughts on dollar breaking the rest of the world, how it affects gold, silver. Dollar is a problem, right? Short term and long term, right? So that's my reason where, whether the Fundstrat, right, he's right. He's right. I just don't think he's right about the timing. Right? It's very easy to be correct on the direction of the next move. A little bit more tricky and difficult is the timing. Yes, he's absolutely right. We will retest 360. I do agree. High probability, maybe not 100%, but maybe 80% probability. But the question is the time. Is it next week we're going to retest this level? Is it, end of July, first week of August? Let's put this line. What's today? July 8th, right? We have 3 weeks. So 3 weeks. How many of you agree with the Fundstrat, technical analyst, that we will revisit he actually implied that we will break this level. So how many of you think we will revisit this level or break this level, right? Scenario number 1 by end of July, right? And how many of you think we're gonna break the 394, right? So and that's an important decision, right? In terms of your portfolio composition and trading. How many of you think that in the next 3 weeks we will be at 1? How many of you, or close to 1, right? It could be 355, could be 365, but close to 1 versus close to 2, where we break above this level. Which event is going to happen first? How many of you say 1? How many of you say 2? Wait a minute. All right, Kevin, thank you. Manipulation, yeah. 394. Okay, Bill at 3. Okay, above 394. Chet 2. Lalit 1. Dan 1. Carmen don't know. Okay, half of you said 1, half of you said 2. I'm gonna go with 2. But you know, it kind of reflects we are a good sample size of opinions out there in the market, and it could be chief investment officer of, you know, Fundstrat or UBS. You're gonna get the same answers, right? You're gonna get the same answers. You know, we'll see, right? And but the main point I'm trying to encourage you to think about is that there's no right or wrong, right? The 2s could be right, the 1 could be right. You have to realize that there's going to be certain events that can influence that outcome. And it's not going to, you know, Stock Forecast Toolbox can only give you the current direction, right? And you can actually trade with the current trend or current direction. You can go opposite of the current trend. But that is what the trading is all about. You formulate an opinion. You think this level, you know, my opinion that 2 is going to happen. So I still have bullish, and on pullbacks I'm buying, right? If you're on 1, you do the opposite, right? You sell, right? You sell every time we reach higher, and then maybe you'll buy when it gets close to 1, right? So completely opposite actions, but we both, that's what trading is all about. You have an opinion, and how much money are you willing to invest based on your opinion? You know, if it's a 50-50 chance, maybe it doesn't make sense to put a lot of money in this trade. If you're 70% chance that it's going to be 2, okay, then you can be a little bit more aggressive. But do realize markets are random, and events like CPI data will ultimately impact whether we're going to have 1 or 2, and nothing else, right? It's not going to be Fundstrat manager, or it's not going to be Vlad, or it's not going to be anybody on this room. The outcome will be purely dictate how the majority of the people will react to CPI numbers. What are the CPI numbers? And the more importantly, how will majority of the people react to that? So it doesn't really matter what Vlad thinks or what Fundstrat, you know, you have to get into psychology of majority of the people and how they will react. If majority of the people think that the market is oversold and CPI number is not, you know, Fed will not push interest rates to 100 basis points, most likely it's going to continue going higher. Right? If majority of the people based on CPI number think that by the end of July, Fed will raise it by 100 basis points, well, the market is going to go lower, right? And that's the right way of looking at these outcomes of these events. All right, check. Tesla moves are falling. People do react to the news. Carmen, yes. People do react to the news, Elon Musk's, people do react to Tesla news, but they don't change the trends, right? It doesn't matter what Elon Musk can say. He will not change the long-term trend that the Tesla is in downtrend, right? You know, because he just cannot, he can move short-term the market, but not long-term, right? So that's something to remember. Same thing with Fundstrat manager, you know, he cannot move the market. It doesn't matter what he says. But, you know, the only person who can move the market, unfortunately, is the Fed, right? And their reaction to the CPI data. That's the only, you know, right now, thing that can move the market. The next thing that can move the market is the reaction to the earnings news, right? If we're going to have lower single-digit news growth, market is going to sell off. If we're going to have a high double-digit growth, market is going to rally, right? So those are the only things that can change the trend, not individual news, from individual people. All right. Well, 394 is easy, right? That's this overhead resistance, right? 394, the reason he says this because this is a second leg up, right? He basically assuming that we're not going to break this level. It's a short-term resistance. It is a resistance. It might be, right, you know, market is extremely overbought right now. Market is overbought, so it needs to pull back, probably to 380 level. You know, so if I have to guess, as a result of CPI, we're either going to break through it or we pull back to 380 and then the rally continues. That's my guess. 50% retracement, we're back to 380 and then up. That's what I think is going to happen in the next couple of weeks. Who puts the CPI data? Government. The question was, who puts the CPI data? One of the, you know, who reports CPI data? Yeah, US Bureau of Labor Statistics. Okay, good. All right, so US Bureau of Labor and Statistics. Thank you, Carmen. All right, so how do we, okay, going back to my favorite strategy, again, selling out of the money spreads. If long-term, I think the market is gonna go lower, I buy December 240 put. If short-term, I think 280, market is gonna stay above 280 level, then I sell short put, right? So it's a bullish strategy, right? It's a diagonal, right? You can do vertical, you can diagonal. I did similar strategy short-term. These are long-term trades like Delta Airline, right? We're going into the earnings. Delta Airline is trading at 30, right? Delta Airline is trading at 30. I'm selling 25 put. The Delta Airline will have to drop 20% as a result of the earnings next week for the trade to go against me. And I was able to collect 18 cents, almost 75 basis points, right? So you can collect 75 basis points, you know, by holding a position just a couple days, right, with earnings. So around earnings or around events, selling out of the money premium, especially if you basically say, you know, we're not in a bull market, right? We're not going to make all-time highs, right? We're going to trade in some kind of range, right? We're probably halfway through this bear market. Maybe we're, I don't know, we'll trade in the range between 300 and, well, that's pretty wide range, let's say 430, right? If you think we're going to trade 40 points to the upside, right, 10% up and 10% down, right, most of the time, and that's your range. And you know, market rallies, you sell out of the money call spreads. Market sells off, you sell out of the money put spread, right? So that would be my strategy. If you're an aggressive trader, you know, earnings strategies, you know, that expires 1 or 2 weeks. If you're more of a momentum trader, directional trader, you know, you go out into the next few months. So Elite Circle gives you recording. Every trade is explained. Again, I encourage you to, if you have time, please go to YouTube and search for the word Tradespoon. We have, you know, we're building a community of like-minded individuals. We're here to support each other. YouTube on Wednesday, you can participate for free. You don't have to be a paid subscriber, but every Wednesday in the morning on the closing bell, you can participate in live trading room. You can ask questions. You can hear other people asking questions. So you can share the ideas. We can support each other. So, you know, search for the word Tradespoon, click on subscribe. You will get videos every time there's an invitation or a market commentary or market brief. And if you, even if you do like any of the videos, do me a favor, just share it with your friends and if you're part of any forums, right? You do not want to trade alone in this market, right? One opinion is not enough, right? You want to hear opinions of other traders. You probably don't want to listen to too much to the news because, you know, you have to understand that different presenters on CNBC and Bloomberg have different agenda, different background, right? Some of them managing others people money, they cannot be bearish by definition, right? If you're managing others people money and you're bearish, that means, you know, unless you're managing bearish portfolio, right, your clients will leave you, right? If you say market is going to drop another 30%, well, why are you holding all my stocks, you know, in equity, right? That doesn't make sense. So you'll never hear, you know, majority of the people on CNBC being bearish because they're managing others people money, right? So just as simple as that. So it's important to be part of the community where we're all managing our own money, right? I don't really, I mean, I want everybody to be successful, but I'm managing my own money, right? You know, what I do has no impact, you know, on anybody else, right? I do what, you know, I'm managing my own money. And that's, you know, that's much different than if I have to manage other people's money. All right. So sign up. If you like the video, share it, you know, click, you like the brief, you know, copy this URL. And if you're part of the, you know, take that video and share it on the blog, or share it if you're part of any forums or any community. So that's one. And then Elite Circle, again, you get morning bell, you have closing bell every day. You can watch the recordings at your own pace. You can see all of my orders and all of my positions, and you get SMS alert every time I trade, right? So I encourage you to take advantage of this Elite Circle subscription. Trader came in late. Oil. Again, I think the commodities bull market is over, right? This is a pretty big sell-off. Crude oil did rebound. I think the top is set, right? I think the top is set. Usually it's a 50% retracement. So, you know, 120 to 92, 30 points, 15. So somewhere around 50-day moving average. I think realistically, it's going to have a hard time breaking through the 50-day moving average at this point. We can overshoot like this, right? But it now, you know, there was a huge divergence, right? Because there was inflation. So market was, you know, QQQ was going this way, right? This was the trend of QQQ since 2022, right? They were going this way, but this oil was going this way. That trade is over, my opinion. My opinion that trade is over. It's not going to continue because we're talking about now, most people are afraid of recession. And during recession, nobody needs oil, right? Demand destruction. Or less people need oil. People fly less, people, you know, transport less, right? Transportation sector is down, you know, right? You know, so trucking companies are going to be down. So I think, again, I think there is a, you know, probably July through August, I put 2. So that means oil is going to go higher, my opinion, right? QQ is going to go higher, oil is going to go higher. I think after, you know, as we're approaching closer to September, October, you know, QQQ is going to go down, right? And so will the oil, and so will the oil. Thank you, Trader. Your opinion on strategy of putting an iron candle a day before earnings and closing out day to get volatility crash? I do that very often, right? So you can see my trade on Delta Airline, right? Sometimes I do it obviously in advance if I think market is going to continue kind of being bullish. So I do this in advance. If I didn't have that opinion, I wouldn't do it in advance. But part of the Elite Circle, you will see every week I put at least 1 or 2 trades. You know, next week JP Morgan, the Delta Airlines, I will do. Sometimes I do iron candles, sometimes I'll only do put spread, depends on, you know, my view on the market. I don't always do it the same way, but more often than not, I do, you know, like Micron, right? Micron, I think, was the last where I did both. Right, so Micron was an iron candle, right? I sold the call spreads, I sold the put spreads, and I closed the trade. trader, thanks, Chuck. Thanks. So if you're interested in earnings trades, I encourage you to sign up for the Elite. It has a mixture of different trades. Watch the recordings. Every trade has a video. A lot of people say, well, how do I know if it's earnings or not earnings? Please watch the recordings. If you're in a trade, you either want to look in the live trading room or at least go through recordings and make sure you understand, my process of entering the trade, managing the trade, adjusting. You can't get it just by looking at the orders and positions, right? You want to watch the videos. All right, that's all I have for today. Thank you very much. Have a great day. I will see some of you at the closing bell, and if not, Monday morning and the live training room. Thank you very much and have a great day.